Hold on to your hats, folks, because Warren Buffett just made a move that has Wall Street buzzing. The Oracle of Omaha has shaken up his portfolio in a big way. We're talking billions of dollars shifting from one asset to another. This isn't just some routine rebalancing. This is Buffett sending a signal about where he sees the market heading. Between March and June of 2024, Berkshire Hathaway's portfolio underwent a massive transformation. The Oracle, known for his long-term investment approach, decided to make some significant adjustments. He significantly increased Berkshire's holdings in short-term U.S. government bonds, a move often seen as a flight to safety. At the same time, he trimmed down some of the company's stock holdings, most notably in tech giant Apple. Is this a sign that Buffett is bearish on the market, or is there more to the story? Let's dig deeper. One of the most eye-catching moves Buffett made was to significantly increase Berkshire Hathaway's stake in short-term U.S. government bonds. These bonds are considered one of the safest investments out there. They're backed by the full faith and credit of the United States government, which means they're about as close to a risk-free investment as you can get. In the second quarter of 2024, Berkshire Hathaway poured a whopping $10.3 billion into these bonds, bringing their total holdings to a record $147.2 billion. That's a lot of money parked in what are essentially IOUs from Uncle Sam. So, why is Buffett making this move? It could be a sign that he's feeling a bit cautious about the market. When uncertainty reigns, investors often flock to safe haven assets like U.S. government bonds. These bonds offer a guaranteed return, even if it's a modest one. Think of it as Buffett putting on a financial helmet while the market is experiencing some turbulence. He's protecting Berkshire's capital while he waits for better investment opportunities to emerge. We've seen inflation rearing its ugly head, interest rates on the rise, and geopolitical tensions simmering. It's enough to make even the most seasoned investor a bit jittery. Buffett, with his decades of experience, knows that sometimes the best offense is a good defense. Now let's talk about Apple. Apple has been a darling of Berkshire Hathaway's portfolio for years, representing a significant chunk of their holdings. But in a move that surprised many, Buffett decided to trim down Berkshire's stake in the tech giant. During the second quarter of 2024, Berkshire Hathaway sold off roughly $8 billion worth of Apple stock. Even after the sale, Apple remains Berkshire Hathaway's largest single stock holding, accounting for a hefty 46% of their stock portfolio. So it's not like Buffett is abandoning the tech giant altogether. This move has left many wondering, why would Buffett sell a stock that has performed so well for him in the past? To understand Buffett's move, we need to talk about taxes. When you hold on to a stock for a long time and it goes up in value, you have to pay capital gains taxes when you sell it. Buffett is a savvy investor, and he's always looking for ways to minimize his tax burden. By selling some of his Apple stock now, he's realizing some of those capital gains and locking in his profits. This gives him more cash on hand, which he can then use to reinvest in other opportunities or simply hold on to as dry powder. Remember, Buffett is a long-term investor. He's not playing the market for quick gains, he's building a legacy. So, while some might see this as a bearish move on Apple, it could simply be a strategic move to optimize Berkshire Hathaway's tax situation. Section 5. A cloudy economic outlook. Buffett's concerns. Now, let's step back from the world of stocks and bonds for a moment and talk about the bigger picture. The U.S. economy. Warren Buffett is a keen observer of the economic landscape, and he's not afraid to share his views, even if they're not always rosy. In recent years, Buffett has expressed concerns about the growing U.S. national debt and the potential for inflation. The U.S. national debt has been ballooning for years, and it's now at a staggering $32 trillion. This debt burden puts a strain on the economy, making it more difficult for businesses to grow and for individuals to prosper. Inflation is another concern. Inflation is a general increase in the prices of goods and services, and it erodes the purchasing power of our hard-earned dollars. When inflation is high, it costs more to buy the same things, which can put a real dent in our wallets. Buffett has been warning about the dangers of inflation for years, and it seems like his concerns are starting to materialize. The Federal Reserve has been raising interest rates to try to tame inflation, but it's a delicate balancing act. If they raise rates too quickly, they could trigger a recession. Section 6. Apple's future. Still a shiny apple in Buffett's eyes? Now back to Apple. Despite selling some of his Apple stock, Buffett has made it clear that he's still a big believer in the company's long-term prospects. In a recent interview, he called Apple a terrific company and said that he has no intention of selling any more of his shares. It's important to remember that even the Oracle of Omaha doesn't have a crystal ball. He's not always going to get it right, and he's not afraid to make adjustments to his portfolio based on changing market conditions. Whatever his reasons, it's clear that Buffett still believes in Apple's future. Section 7. Cash is king. The allure of liquidity. Another key takeaway from Buffett's recent moves is his emphasis on liquidity. Liquidity refers to how easily an asset can be converted into cash without significantly impacting its price. At the end of the second quarter, Berkshire Hathaway was sitting on a record $147.4 billion in cash and cash equivalents. In a world of economic uncertainty, having a large cash hoard gives Buffett flexibility and peace of mind. He can afford to be patient and wait for the right opportunities to come along, rather than feeling pressured to put his money to work in a volatile market. Section 8. The Oracle of Omaha speaks. Reading the tea leaves. Warren Buffett is a man of few words, but when he does speak, people listen. His annual letters to Berkshire Hathaway shareholders are legendary for their wit and wisdom, and his pronouncements on the market are closely followed by investors around the world. So what can we glean from Buffett's recent actions and statements? First and foremost, it's clear that he's cautious about the current market environment. The combination of high inflation, rising interest rates, and geopolitical uncertainty is enough to give even the most seasoned investor pause. Second, Buffett is a firm believer in the importance of value investing. He's built Berkshire Hathaway into a powerhouse by taking a disciplined approach to investing and focusing on the long game. Section 9. Market reactions, ripples in the pond. When Warren Buffett makes a move, the market takes notice. His recent portfolio adjustments sent ripples through Wall Street, prompting analysts and investors alike to dissect his every move. Some saw his decision to sell Apple stock as a sign that the tech giant's best days are behind it. Others viewed it as a savvy move to take profits and rebalance the portfolio. The increase in Berkshire Hathaway's cash holdings also raised eyebrows. Some interpreted it as a sign that Buffett is bearish on the market and expecting a downturn. Ultimately, only time will tell how Buffett's recent moves will play out. Section 10. What's next for Buffett? The future is unwritten, so what's next for the Oracle of Omaha? That's the million-dollar question, and unfortunately, I don't have a crystal ball. But if history is any guide, Buffett will continue to make shrewd investments that generate strong returns for Berkshire Hathaway shareholders. He may look to deploy some of his massive cash hoard in strategic acquisitions. He might increase Berkshire Hathaway's stake in existing holdings that he believes are undervalued. One thing is for sure, Warren Buffett is a master investor who has consistently outperformed the market for decades. Section 11. Investor Takeaways. Lessons from the Oracle. Warren Buffett's recent portfolio moves offer valuable lessons for investors of all stripes. Here are a few key takeaways. Stay disciplined. Buffett is a master of discipline. He doesn't chase fads or get caught up in market hype. Be patient. Buffett is a patient investor. He's willing to wait for the right opportunities to come along, even if it means sitting on a large cash hoard. Don't be afraid to make adjustments. Even the Oracle of Omaha doesn't get it right all the time. By following these principles, investors can increase their chances of achieving long-term success in the market.